And our next guest says that the uncertainty from tariffs that markets are currently facing is like being forced to have to eat your vegetables before dessert. Jackie Cavanaugh is portfolio manager and analyst at Putnam Investments. I think my entire life I didn't eat enough vegetables and fruit. I think I'm paying for that now, Jackie, believe it or not. But which vegetable are you talking? Are you talking broccoli? I don't want
broccoli, carrots, peas, all of it. I haven't eaten enough vegetables either, Joe, but it's nice to see you all. Thank you for having me again. Yeah, I mean, we think that, you know, we're getting the vegetables now, the tariffs. We're certainly seeing the uncertainty that's causing in the market, in the C-suite, where there's a real pause around hiring, CapEx spending. Capital markets activity has not been what we expected coming into this year. And it's really the uncertainty of the vegetables, the tariffs. But what I would say to investors is dessert is coming. Deregulation, capital relief for the banks, tax policy are still coming. I would have liked to see them a little bit more coordinated from a timing perspective, but we continue to see them down the road. And so the key risk I think that we see is don't let us talk ourselves into a slowdown or into a recession. You are seeing some hesitancy within the C-suite, but the consumer still remains reasonably strong. If you look at some of the spending data through the middle of March, it continued to be 6% plus ahead of last year. Unemployment is still quite low. The JOLTS, while I know the market, some members of the market doesn't like the JOLTS report, the Fed likes it. There's still more jobs per unemployed person. So we still think that the labor market's in good shape, the economy is in good shape, and the risk is we just can't psych ourselves out too much, and just the dessert's coming.
You know, Jackie, the other day, our own Eamon Javers asked the president how long these were going to be on, and he said permanently. So anyone that, I still don't know whether that's across the board for everything, but I really am starting to think that certain things might be a fundamental shift based on trying to bring a lot of these industries back, which is going to be years in the making. I know that he doesn't like trade imbalances. He doesn't like where he thinks other countries are taking advantage of us, but he wants auto parts made here. So even if the countries that are, even if they do take off tariff, that's not going to appease him. And this is going to be a multi-year process to try to bring back all these industries to be made here in the United States. Do we have the patience for that if the market isn't doing well, if the economy isn't doing, if inflation stays stubbornly high from this, or if there is inflation?
So you've asked a great point, and I think one of the key questions that we are seeing, our companies are seeing, is this a negotiation strategy, or is this a revenue raiser? How should we think about the tariffs? I agree with you, Joe. I think this is, somebody asked me, is there a Trump put? I don't think there is a Trump put in the same way that there was in the first term, because I think there is a fundamental view in this administration that some of the trade policies, you can agree or disagree with him, but that some of the trade policies are unfair, and there needs to be a rebalance of global trade. And so I agree, this is probably not something that goes away on April 2nd. But I think what the market's looking for, what CEOs are looking for, is certainty. It's the on and off. It's the tweet yes, tweet no. Yes on Mexico today, no tomorrow. I think a little bit more certainty. Let's get through it. I mean, you listen to some of the CEOs who come on CNBC, and they'll say, we can work with what we're handed, but we need to know what the playing field looks like. What are the rules of the game? And so I think you're right. Tariffs probably don't go away in quick order. From an inflationary perspective, I think there's a lot of questions around, what does it have an impact on in inflation? If it's one time and done, I think that's unlikely. I think that's why there's probably not a Fed put either, because there is probably ongoing concerns that, we've put the fire of inflation out, but the embers are still burning, and will tariffs sort of reignite that flame? We don't really know. We have to wait to see the knock-on effects. But I think you're correct. It's probably not a one and done, but let's get the rules of the road.
Do you think that trying to cut the size of government is also like eating yours, or it's like, I don't know what analogy, or we had a lot of metaphors yesterday, mixed metaphors. But long term, it might be good. Near term, it's disruptive. and it probably doesn't help in terms of sentiment and confidence, and it's painful. And the government, the government we have for the last 4 years prior to this, there was a lot of money flowing, stimulus and everything else that helps an economy, and we're not going to have that either. Which vegetable is this? I don't like Brussels sprouts.
Well, then this is Brussels sprouts, Joe.
They don't like me. They don't like me. That's true.
Listen, I'm not going to let you drag me into a big political conversation. You don't talk religion or politics at the dinner table or on national television.
You think DOGE is a political? You think shrinking the size of government is a political conversation?
I think it's a needed exercise. I agree with you. We can debate the approach that they're taking, and is it going too fast? The whole idea we might break things, but we'll come back and fix it. That is uncomfortable for people. I agree with Becky's assessment earlier. I think the challenge. But the challenge is, we do have an unsustainable debt level. We do have unsustainable deficits, and it does need to be addressed. And unfortunately, that is a challenge that we're facing. We put a lot of money into the economy during COVID, and we need to ratchet some of that back, or otherwise we will, at some point, not today, not tomorrow, we will have a problem in the fixed income markets.